Yo, what is going on? It is Maleki. I growth invest, I dividend growth invest, and just recently I options invest. My main goal is to help you build wealth over time. So if you're interested in following a random blue collar worker's journey to building wealth, then you should definitely like and subscribe to this channel. In today's video, we'll be discussing the options plays for last week as well as this week, and let's get to it. As a side note, I am not a professional, so take anything I say with a grain of salt. Now, just because I'm not a professional doesn't mean I can't have my opinion on certain things. I will definitely tell you what my opinion is, but you should not take it as financial advice. I'm a noob. I have no idea what I'm doing. All I heard is if you long-term invest, you will make money. Everything I do is intended to long-term invest. So if I'm making income from options plays, the whole point of that is to optimize being a long-term investor. You are going to see my wins, you're going to see my biggest losses, and you're going to see a transparent, raw view of my entire financial situation, especially when it comes to this option investing series. So let's go. Spreadsheet, I have every single option trade that I have executed so far. I have a couple of all the different columns. The first one is premium, number of contracts and signed, premium dollar amount, gain from sale, option contract, average price paid for the shares, expenses, and then if it's a call or put. So these are pretty much all the different ones that I have done so far since December 20th, 2020. Looking at this month, these are all the options that I put in for this month. These are the ones that I put in for this week, and then these are the ones that I put for the following week. So pretty much I'm gonna kind of sum it up. So last week I actually put in my option trades on the Friday before the 12th. So what I did is I bought back the calls, and then I decided to buy the call back and then sell a covered call on Tesla and Palantir for the following week. Well, in that time for the following week, what happened was Tesla blew up and Palantir both blew up, as in blew up in stock price. So what I had to do is I had to buy the calls that I was selling back, and actually I had to pay a high premium because I was paying at the money calls. Actually, kind of when it passed the strike price, and I even paid more than what it would have been if it was at the money, just because it blew past the strike price, and when I wanted to buy at the strike price of 645 or the Palantir one of 25, I had to pay a higher premium for that. That's why it's called premium, because it costs money. So pretty much, for the Palantir call, for the first week, so let's just talk about 312 that week. So I pretty much bought it for like $388. Excuse me, let me just make sure I'm looking at the right one. $480, and then I had to buy the call back, and then later on I got $288. Where for the Tesla ones, the first initial one was $1,290 that I got, and then I had to buy the call back, and then I got $1,000. So let's just use Tesla. Just from Tesla, I paid $4,400, and I pretty much got about $2,300 back already. So I'm in the hole, maybe another $2,000, but it's not that bad of a hit. And if you look at this week's calls and puts that I put in for the Tesla, I got another $1,000, so that takes it another $1,000. So really the hit for the Tesla, the 4,400, was really $1,000 at this point now, because we have recovered a little bit. And then for the Palantir, I only got $176. What I decided for the Palantir to do was to, instead of doing 0.3 delta, what I'm doing is I'm actually just taking 20-cent contracts and just going with that, because it is much more volatile, and I'd rather own the stock long term than just trying to harvest premium. In the past, my focus was harvesting premium, but because that acquired a little bit more margin, and I'm just not trying to be that risky anymore. So the plan is not necessarily to get a 30 delta or a 3.3 delta, but to just get my $20 per contract for Palantir. For Tesla, I still want to be getting $1,000 per contract, because I do want to pay off my margin, but we'll talk about that in the next thing. So my total amount of money that I made this week was $1,281. So let's head over to my monthly overview. So I have two accounts that I have options in. The first one is Robinhood and the second is Fidelity. In my Robinhood, I have the Palantir, and then in my Fidelity, I have the Tesla. So just two, I'm gonna have like two different approaches for each one. But again, the focus is long-term investing and getting income for holding onto the stock. So in the Robinhood, this is where I have Palantir. The total amount of money I have personally used to invest is $16,000. My plan here is to not add any money into this account. So total income for this month, $1,387. Total expenses, $1,220. If I did not buy back that Palantir call, if I didn't buy it back, that $1,000 would be away. So my gain would have been more closer to $800. So net income was $166.35. It really would have been much higher than that. And then this percent gain would be much higher. But just from this gain alone, it's a 1% gain for this month. So I did this number divided by this number and gave me point something at time. So by 100 gave me a 1%. So pretty much a 1% gain, if you do that every single month, would be a 12% return just from income alone, and not even talking about price appreciation of stock. So I think that's a pretty good way to invest or just get extra money. If you look at the funding here, my plan here is to not add any of my own money. In my Fidelity account, I will add money. For my Robinhood, my focus here is to show that if someone started with $16,000, can they build this up to a decently sized portfolio? And I want to say the answer is yes. But again, I have no idea what I'm doing, but I believe you could. So I'm just showing all the haters that no, it's too hard. It's going to happen. And then for the Fidelity, the amount invested. So if you looked at my other spreadsheet, my average share price of Tesla stock is $608. Well, the only amount of money I actually put in was $61,904.42. So when I started this account, I actually started with only 160 shares of Tesla. And what I did is I used margin to get up to the 300 shares. So I started with $120,000 in margin, and now I've dropped that margin down to $54,000. So pretty much this is the only money I actually put in myself, and I was using margin and options income to pretty much buy Tesla shares. So to me, because I didn't have to work for this money, I'm considering it not necessarily like free money, but like I pretty much got 100 shares of Tesla for free, or 140 Tesla shares for free. So that's kind of how I view it as, because I haven't actually used my own money to do it. Once I start putting my own money and get option income, like we're gonna have two sources of income increasing my position. So let's just keep looking at it. So again, $61,000. So my average price per share is about $376. Option income, I made $4,394 so far in the month of March. There's only been 3 weeks in March. We still have one more week, so we'll see how that goes. Expenses, $4,406.14. If you look at it, net income of negative $12. Because I had to buy this back, huge dent in my plans. But again, not necessarily a big deal if this only happens once or twice a year, where you have to buy back the calls and then you just keep selling the calls moving forward. So again, not a huge thing if you look at the overall picture. So like 1 or 2 months, like you might be in the negative because like you had to buy the calls back, but that's okay. I want to hang on to all the Tesla shares. I do not want to get rid of them. So I want to keep building my position. In terms of funding this year, I really didn't add my own money. And once I fully fund my Roth IRA, which is in my dividend growth investment account, once I fully fund that, then all the extra money I will put in here. But the way it works here is like if you put money into this account, it'll keep subtracting from the margin. So ideally, if I put my own money and the option incomes, this should hopefully drop my margin pretty quickly. So the plan moving forward will be to, I want to get rid of the margin ASAP. This month will probably be a wash. I will be in the positive a little bit, but not as much as I wanted to. But we're building wealth week by week. So hopefully, over time, these numbers will be much higher, and that ultimately this margin is down, so that I can acquire more Tesla shares, which then the Tesla will grow in the future. And then the end goal too is for this Fidelity account is I did have to sell 2 covered calls for $29,500. I would like to buy those back. The reason I had to do this in the first place was I was going to get margin called on my Fidelity account because I was borrowing too much money. So what I did, I used to owe $88,000. I had to do this to drop my cost basis down my margin by $30,000, which now it's about $54,000, and allowed me to maintain my Tesla shares, because again, I did not want to get rid of them. I hated having to do this, but it needed to be done. So again, this is the plan for this. Let's just look at our total premium we've harvested. So December 20th, 2020 was when I started all of this. So total amount so far since then, $59,116. Total expenses, $6,693.33. In this expenses, this is including the Robinhood interest, the Fidelity interest, as well as the commission that you have to pay to do Fidelity options, which I think is stupid that you have to pay to execute options in Fidelity, but that's a side note. So this is the total amount I get to keep after expenses, and then this is gain from sales. So I only got assigned twice where I was okay with getting rid of my shares. So that's the gain from the sale. So pretty much this is the total amount harvested. So, you know, if you actually subtract the 30,000, I really would have made $22,423. And then that's would have been the expense ratio, or like total expenses. So I mean, $22,000 and then paying about $7,000 in expenses. I'll take it. I mean, I'll take it. But again, there's still a lot more that I need to learn. There's still a lot more that I need to do going forward. But this is the raw look of what my finances look like. The last thing is, so I'm a registered nurse. I'm a blue collar worker. This is my annual salary. So if you look at these months, you know, good amount of money being paid out in premium. In March, I'll run the numbers of how much money I made. These, the March numbers will be a lot lower than these numbers because I was heavily using margin in these 2 months. So the March numbers will probably be maybe half of what this is, but you know, that's gonna be fine because if it's close to what I'm getting paid as a registered nurse, I mean, it's pretty awesome knowing that the same amount of money as I make in my day job, I can make an options income. So I think that's a pretty cool thing to do. And again, you know, the plan is to, you know, I'm a growth investor, I'm a dividend growth investor. I'm using these options to just keep enhancing my long-term positions. But that's the look at it, everyone. If you like the video, don't forget to drop a like. Also subscribe to the channel if you want to follow me on my journey. If you don't want to, that's totally fine, up to you. But I hope you all have a great day, and see you at the next one.